Most people with $10,000 will do absolutely nothing with it. They'll leave it earning 0.01% to win the bank, while millionaires are quietly getting richer using the exact same money, just invested differently. Here's the good news. You don't need to become a financial genius to join them. Dave Ramsey didn't get rich by picking individual stocks. Warren Buffett advises regular people to invest in index funds. Wealth building isn't complicated. In the next few minutes, I'm going to show you exactly how 3 simple Fidelity funds can transform your financial future. We're talking about how to make money in the stock market using the same strategy that's created more millionaires than any other method. This is how to get rich without gambling, without stress, without constantly watching your investment portfolio. So, here's my question for you. Will you be the person who finally takes action today? Or will you be the same person next year, still wondering how to get rich while your money sits there doing nothing? Let's find out what your $10,000 could really become. Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. Firstly, when it comes to ETF investing and building wealth, not all index funds are created equal. And that's exactly where Fidelity Index Funds shine. Fidelity has built a reputation as one of the most trusted names in personal finance and money management, offering funds that are simple, transparent, and cost-effective for both beginners and seasoned investors. Right now, we're in a unique market environment. Interest rates remain elevated, inflation is persistent, and global trade tensions create uncertainty. Therefore, this isn't the time for risky speculation. It's time for strategic diversification. My selection criteria focused on 3 pillars. 1. Proven long-term performance through multiple market cycles. 2. Strategic diversification across sectors and geographies. 3. Income generation potential for both growth and cash flow. Firstly, I would like to introduce you to the compound growth formula. It's what I often refer to as the magic formula. Future value equals present value multiplied by 1 plus annual return multiplied by the number of years. Listen, you don't need to be a math genius to understand it. Trust me, it is very simple. Let's break down each component. PV, which represents present value, is your initial investment today. R represents the annual return. N represents the number of years. This is how long you keep your money invested. For instance, 10, 20, or 30 years. Now let's start with my number 3, Fidelity NASDAQ Composite Index. Ticker symbol FNCMX. I call it the Innovation Powerhouse. My strategy for choosing FNCMX is broad technology and growth exposure. This fund is your ticket to owning pieces of America's most innovative companies. With over 2,800 holdings, you're instantly diversified across the entire NASDAQ composite. Top holdings include Apple, Nvidia, Microsoft, Amazon, and Tesla. Next, the performance metrics. A formidable 10-year return of 207.77%. Expense ratio, 0.29%. Dividend yield, 0.72%, and an outstanding 10-year dividend growth of 9.57%. Now let's dive into the calculations of the $10,000 investment strategy. We'll start with the 10-year growth analysis. After 10 years of compound growth at an annual rate of 12.94%, your initial $10,000 investment would grow to $33,970. This represents more than a tripling of your original investment, demonstrating the power of consistent market performance over a decade-long period. Next, the 20-year wealth accumulation. By the 20-year mark, that same $10,000 investment would have expanded to $118,000, successfully breaking into 6-figure territory. This dramatic increase showcases how compound interest accelerates over longer time periods, with each year's gains building upon the previous year's total value. And my favorite, the 30-year transformation. At the 30-year milestone, your original $10,000 investment would have grown to an impressive $349,886. This remarkable growth comes from 2 distinct sources. $328,467 generated through capital appreciation as the underlying stocks increased in value, and an additional $21,419 earned through the systematic reinvestment of dividend payments back into the fund. This calculation assumes a consistent annual growth rate of 12.94%, which reflects the fund's historical performance and illustrates why patience and long-term commitment are crucial elements of successful investing. Before we continue, if you find value in this video, please hit the subscribe button to join our growing community. We appreciate your support. Thank you. Next, my number 2 ETF is Fidelity Large Cap Growth Index, ticker symbol FSPGX. I call it the Balanced Growth Machine. If FNCMX is your sports car, FSPGX is your luxury SUV. Powerful, reliable, and built for the long haul. The key advantages include 400 carefully selected holdings, ultra-low 0.04% expense ratio, one of the lowest available, and a strong focus on established profitable companies. Next, the performance track record. 1. 10-year return is over 200%. 2. 1-year return of 4.4%. 3. Average annual share price appreciation is 14.26%. 4. 10-year dividend growth is 16.35%. Now let's dive into the calculations of the $10,000 investment strategy. We'll start with the 10-year performance analysis. Using the fund's compound annual growth rate of 14.26%, your initial $10,000 investment would grow to $39,610 after 10 years. This represents nearly quadruple your original investment, demonstrating exceptional growth potential that significantly outpaces traditional savings accounts or conservative investments. Next, the 20-year wealth building. By the 20-year mark, your investment would have expanded to $158,385, successfully breaking through the six-figure barrier. This substantial growth illustrates how the middle years of long-term investing become increasingly powerful, as compound returns build momentum on an ever-growing principal balance. And my favorite, the 30-year financial transformation. After 3 decades of compound growth, your original $10,000 investment would have transformed into an impressive $641,219. This remarkable wealth accumulation stems from 2 key components: $610,633 generated through capital growth, as the fund's underlying stocks appreciated in value, and an additional $30,586 earned through the consistent reinvestment of dividend payments. This fund exemplifies the extraordinary power of long-term investing, showing how a single $10,000 investment can grow to over $640,000 through consistent market participation and the mathematical magic of compound returns over 3 decades. My number 1 for this portfolio is the Fidelity Natural Resources Fund, ticker symbol FNARX. Here's your secret weapon against inflation and market volatility. While tech stocks can swing wildly, the world will always need energy, oil, and natural resources. That's why I often call it the income and inflation hedge champion. I believe it is important to give this fund strong consideration because it could provide 1. An inflation hedge because commodities rise with inflation. 2. The global energy demand is not slowing down. 3. Dividend income provides cash flow. 4. Portfolio diversification that's not dependent on technology. Now the income story. Current dividend yield is 3.0%. This is 6 times higher than growth funds. The 10-year dividend growth is 11.35%. And the annual price appreciation is 2.51%. Although the Natural Resources Fund's 10-year return of 127.23% is lower than that of high-growth technology funds, but this seemingly modest performance conceals its true wealth-building power. The fund's strength lies not in spectacular price appreciation, but in its ability to generate consistent, growing income streams that compound over time. After 10 years, using the fund's total return rate of 5.86%, which combines 2.51% annual price appreciation with 3.35% average dividend yield, your investment would reach $19,722. This nearly doubles your original investment while consistently generating income throughout the period. By year 20, your investment would have grown to $67,146, demonstrating how steady compound growth builds substantial wealth over extended time periods, even with more conservative return rates compared to pure growth strategies. After 3 decades, your original $10,000 investment would have transformed into an impressive $732,219. Remarkably, $656,497 of this total wealth, representing 89.7%, comes from reinvested dividends, while only $75,722 stems from capital appreciation. This illustrates the extraordinary power of dividend reinvestment over long time horizons. Your total $30,000 investment across these 3 funds would generate a combined portfolio value of $1,723,324 after 30 years. This represents a remarkable transformation, where every dollar invested becomes nearly $57, demonstrating how strategic diversification across growth, technology, and income-focused funds can create life-changing wealth. Think about it. You're not just investing $10,000. You're planting a seed that can grow into hundreds of thousands, or even millions if you stay patient. Every reinvested dividend, every year you stay invested, is another step closer to financial freedom. Now listen, if you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth together. If you are interested in how savvy investors are turning $20 a day into $1.4 million, check out our video on that topic. The link is in the description. Please note that we are not financial advisors. This content is for informational purposes only. Click on the next video on your screen. We appreciate your support. Thank you.